So the IMF has a pretty good track record for predicting growth. How worrisome is the downgrade to your portfolios? Let's ask our traders in the floor show. John Corpina, if it were just one reduction, okay, but it's now the third, now a trend. How should investors be hedging their bets?
Clearly, I don't think this is new news to anybody, right? The fears, their concerns that are out there are ones that we've been talking for 6+ months now. We're talking about China, we're talking about Brexit. All these certain issues that are out there clearly going to affect overall growth, and it's going to translate to U.S. growth, too. So I think investors need to take this into consideration as we get into the second quarter. You've already built yourself a nice little kitty in the first quarter, right, up about 13% in the S&P. So hold on to that. Be able to weather the storm through that. You're going to have to wait this out for a little while, and then I think growth continues as we get towards the end of the year. We're going to get a lot more clarity as to those situations in the next few months.
Phil, I'm looking at the volatility index. It's showing some signs of life, or at least a little bit of jitteriness here, right. Up about 8% at the moment. We do have a lot of concerns, not just the IMF, the situation in Libya and oil. We're wondering what Russia will eventually do when it comes to oil output. Give us a sense of what you think that investors should be doing to capitalize. Is there a way? There's always a trade, isn't there?
Well, there is. You know, we've been warning people in the energy space, get hedged. There's a lot of upside risk. And in a lot of the situations that's happening with Venezuela, with Libya, and Iran, they were somewhat predictable. You know, the sense that Libya was going to be a stable place for a while. Their oil production was rising. I said, don't bet on it. You know, it's still a very, very tenuous situation. And now the possibility of losing Venezuelan oil is going to cost the U.S. more because we use a lot of that same light oil. It'll be a boom for shale producers because they're filling that void. But yeah, very, very much a lot of risk on the table for oil. You know, look to buy breaks because that's going to be the move.
Yeah, we're looking at OPEC nations here, and it does bring into account that several of them are really engaged in turmoil. Larry Shover, Phil Flynn believes, he didn't get to say it, but it was on our banner, that the IMF is the worst. That's his quote. I'm going to take a disagreeing position on that. You know, it was Christine Lagarde, who runs the IMF, who pointed out that if the United States cut taxes, this was a couple of years ago, we would see very solid growth, and indeed that's what came to pass. But Larry, is there a way to morph a portfolio according to a slowing global picture?
Well, if you really think it's slowing, then yeah, you'd want to be out of equities. But I would just caution everybody that, you know, prediction services, whether it be a central bank, whether it be the IMF, they're looking at backwards data. And what's important is their error rate, like how big their error is. The IMF in 2008 predicted that only 7 countries would be in recession in 2009. That number was 91, not 7. So with that in view, stay diversified, stay in the game. There's a lot not to like. It's not time to pop the corks yet, but I think the market's better than most people think.
Right now, Dow is down 188, but